Brad Gerstner said his firm sold its Uber stock after the election and put that money into Tesla. Keep in mind, Brad Gerstner has not always been this bullish on Tesla. He said, quote, 2025 is going to be about robotaxis. We were present at Tesla's Robotaxi Day. We were impressed. Uber has a hugely disruptive force coming in the case of Tesla. Tesla is running away with its full self-driving capabilities. Now take a listen to what was said in this full clip posted to CNBC. It's only about 3.5 minutes long.
Of how bullish you've been on Uber.
Yeah.
You sold it.
Listen, let me say at the start, Dara has been an incredible CEO at Uber. He's dramatically increased the free cash flow. He's increased the competitive, position of that company. They're the dominant leader now in global mobility. We love the company, and it's inexpensive. However, leading up to the election, right, we had been taking down our position size and we've been rotating into Tesla. Why? Because I said before, we had a ChatGPT moment around full self-driving in 2024. I think the year of 2025 is going to be about Robotaxi. We were present at the Robotaxi Day. We were impressed by the Robotaxi. And so for Uber, they have to get past this moment, right, where, they have a hugely disruptive force coming in the case of Tesla. And now we know that the Trump administration is going to push, right, for a national regulatory change so that will be good for Waymo and good for Tesla. Now, Uber has a solution to this, right? They have Waymos on their platform, but we just want to see it play out. We want to see a few more months of this playing out. So, again, it comes back to portfolio management. For us, the optics, right? And certainly right after the election, we bought more Tesla and we rotated out of our remaining Uber because we think the optics are going to be really tough for Uber over the course of the next few months. And they're going to be really good for Tesla as we get closer and closer to the launch of Robotaxi, which we think will be Q2 of next year.
This feels to me like, the goalposts moved.
Yeah.
Musk's proximity to power, that dynamic has changed. He is becoming quite obvious, a very influential voice in some of the policies that are going to happen, whether they are beneficial to him personally or beneficial to his companies, plural, because I think you could make that argument. That's what this strikes me as, is the goalposts moving in some respects to favor Tesla and in some respects hurt the competitors.
No, I would disagree with that. I think the
regulations that we said of ending the EV tax credits, easing the self-driving regulations, those are undeniable.
But if they change the regulations, but FSD wasn't killing it the way 12.5 is and the way FSD 13 is going, where you have 1,000x improvement in full self-driving safety in 1 year alone versus the 10% per year we were getting up until 2020 because we've gone from these deterministic models to these imitation learning models. It's about the performance at Tesla that is driving us. Now, sure, I think national regulation makes sense. In a country of interstate commerce, does it make sense that one state's going to allow me to drive my Tesla on full self-driving mode, then I get to the state intersection between Texas and Oklahoma, and I no longer can use full self-driving? I have to stop the car and change the mode of driving? That doesn't make any sense, right? We drive cars across state borders, so having a national regulatory framework, not just for Tesla, for everybody, for GM, for Waymo, for everybody, that's just the right policy. I don't think it's about favoring Musk or his companies, though I think regulatory clarity is needed in this country. But I look at it, it's the improvements that are going on in Tesla. And I think, 18 months ago, nobody would have said that this was winner take all or winner take most. They would have said everybody's going to have full self-driving capabilities. I will tell you right now, Tesla is running away with their full self-driving capabilities. The only other game in town really is Waymo.
Wow, I have to say, I thought I was bullish before hearing this, and I'm even more bullish after hearing this. And usually Wall Street, their perspectives don't change my influence. I take each thing as really a grain of salt, combine it into a pie, or combine it into a nice filet mignon or T-bone for that matter. But this, yeah, I have to say, I think is even eye-opening for the bulls. eye-opening in obviously the perspective of the improvements that Tesla is making, but eye-opening to bridge the gap between what we know as retail investors and Wall Street. Brad Gerstner is not a retail investor. Okay? His friends are not retailers. Okay? His buddies are guys on Wall Street managing multi-billion dollar, in most cases, portfolios. And I think he's right. I think 2025 could just be the year of not semiconductors, but full self-driving, robotaxis, and the opportunity that is there. Now, this is not by any means, and I know I'm being dramatic here, but I'm just passionate, excited. So don't get on the messenger here. I think you should be excited as well. But I've talked about this for months now, literally for months now. I think I started talking about this in Q2 of 2024, like midsummer, that 2025 was really going to be Tesla's year. Why was it going to be Tesla's year? And not just Tesla's year, but like your appliers of AI, the companies that are actually doing something with the AI training compute that they are buying. Now, you can say Microsoft, you can say Meta, you can say Amazon and Google. They're all doing things with the, AI race, right? They're all creating products. They're going to create products. But I like to break this down in terms of percentage of revenue, okay? Tesla's going to do $100 billion of revenue this year, roughly, right? Apple does roughly $100 billion in revenue per quarter. Amazon does like $140 billion in revenue per quarter. If Tesla brings in $5 billion of revenue from AI, let's say assume $100 billion a year. If they bring in $5 billion, that's 5% of revenue. Okay, if Apple brings in $5 billion of AI revenue, and let's say they do $400 billion in revenue in a year, simple math would say that's a little over 1% of Apple's revenue being AI, compared to Tesla's being 5%. I think these companies that are smaller in nature than your other big tech names, that can start to pull in more revenue from AI and grow faster, will be seen in a more favorable light. It's kind of like NVIDIA now. NVIDIA's blowing away their numbers still, but their growth rate is expected to slow down. So you can expect less potentially euphoric optimism around NVIDIA, even though they're growing, even though they're going to outgrow all of your other Mag 7 names. Maybe not Tesla. We'll see if Elon's guidance comes true over the next year. You should start to see more attention on the AI appliers. Now, if you want to use the gold rush analogy, in which I think works very well in terms of AI, NVIDIA is the company that's selling the pickaxes and shovels to mine gold. Okay. And, pickaxe shovel makers did very well during that time. But who did the best? It was the guy that bought the best land with the most gold on it for the lowest price, of course. Tesla is the guy that's buying the best land with the largest gold nuggets of all. And that is the transition that I think Wall Street is going to start making, to focus less on the pickaxes and shovels, the easy kind of play here in AI, right? The easy play in the gold rush was just make the pickaxes and shovels. But it's going to turn to who's actually going to produce growth and value creation from the pickaxes and shovels, from the AI, right? This is Tesla. This is Palantir. This is other data center plays. I like Applied Digital. I think they're a fantastic smaller cap company, right? This is Elastic NV that just reported earnings today and after hours, up over 20%. This is Snowflake, right? These are tier 2, tier 3, tier 4 AI plays. I think you're really in tier 2 at this point, direct beneficiaries of some of the AI, training compute that they have bought. Now, to circle back to Tesla, you cannot ignore, as Brad Gerstner said, the regulatory changes that are to Tesla's benefit. Now, On Tesla's last earnings, okay, let's just think about this logically. On Tesla's last earnings, Tesla gave us guidance for robotaxis under the assumption of whoever gets in office, right? Whether it was Kamala or Trump, with obviously policies that were going to benefit Tesla under a Trump presidency, okay? There was no clarity on Tesla's last earnings. I would argue today, Tesla would likely pull forward, as Brad Gerstner is saying, the launch and the extent of the launch of robotaxis. So if Wall Street generally is still expecting robotaxis to launch in just California and Texas by the end of 2025, that could be double or triple that number. Instead of 2 states, you could see 4, 6, maybe more states than that ultimately allow or are forced to allow robotaxis, right? If the regulatory regime changes, and Tesla obviously will meet those requirements at some point in 2025. So instead of by the end of 2025 launching the robotaxi network, you could be looking at Q2 of 2025. Okay? That's a very real possibility. And you could not be looking at 2 states, you could be looking at 6, 10 states or so. Okay? So I think that right there is an upside surprise. Yes, I think Tesla stock has clearly done well in recent days, and it's clearly, pricing in an optimistic, relatively optimistic scenario for the next 12 months. But it's probably not pricing in enough. Now, I think it's also fair to say you're not pricing in optimism or exuberant optimism within Tesla stock. So as long as we don't have a growth scare, in which unfortunately I am expecting in Q1 or Q2 of 2025, I think that's probably going to be your next buying opportunity for Tesla, assuming if Tesla's not a $500 stock by then, which Tesla could hit new all-time highs by the end of this year. And you should be mentally and actually prepared for that to happen. But again, that could be the next big buying opportunity for Tesla if you want more Tesla stock and you are not allocated appropriately. Now, I've also talked about this for really days now. We talked about this a little bit earlier as well. But NVIDIA gave us the best possible scenario for Tesla. Now, it doesn't look like this today, but it will soon start to realize, or soon start to look like this, and people will start to realize this is actually the best possible scenario for Tesla. That being, NVIDIA did not blow away their earnings expectations. They kind of met them perfectly. Slightly exceeded in some areas, slightly underperformed in other areas, again, according to expectations. This is allowing for a broader market rally. The Russell 2000 was up 1.65% today. The NASDAQ was up 0.03%. Are you guys ready for this? The Russell outperformed by about 90x today. 90x. The Russell outperformed the NASDAQ. I can't recall another day where, this has happened even in more recent times. And you definitely seen even cyclicals did well today, but I think that had to do with initial jobless claims coming in at the lowest level you've seen since May of 2024. There was also other less desirable things that came out today, like default rates across the board are starting to move higher, which I think is a longer term problem. But at least in the short term, I think NVIDIA kind of green lights the broadening out of the AI trade. Because again, NVIDIA is not sucking the life or the liquidity out of markets by going up 8.5%, which was what was priced in. And that would have been a $300 billion drain on the rest of the markets. Instead, you're seeing some money go into other areas. And again, it doesn't look like that today for Tesla, but it will soon start to look like that. You will soon start to say, NVIDIA's earnings was actually a huge positive catalyst for Tesla, as well as Tesla, small caps, and cyclicals, kind of value areas that have been left behind in the last couple of weeks. Now, the percent of stocks trading above their 50-day moving average hit 58.70%, up 4.11% today. So 4.11% of stocks broke above their 50-day moving average. And trust me when I say this, there is a lot of room for markets to get more optimistic internally. Now, this was actually the best case scenario of what you want to see. The NASDAQ and the S&P not really going up too much, because that means the headline index, valuation-wise, is not going up more, right? You're still sitting lower than your all-time highs on the S&P. The S&P all-time highs, 600 for the SPY. You're at 593.50 or so. But you're seeing the average stock doing well. We've talked about this before. The average stock actually trades at a historically average valuation of about 18 times next year's earnings. There's room there for multiple expansion. There's also room there for an upside surprise in the average stock's earnings, as per some of my personal calculations that I've done. Now, for Tesla, Tesla's going to benefit from that. Tesla's going to benefit from small caps going higher, from a more risk-on attitude. And I guess the next part of this is something we have not talked about enough here on this channel, but I don't buy into the whole inflation is going to be higher next year thing, okay? Especially cutting government spending. That could be a problem for GDP growth on a headline basis, right? It might reduce some of your GDP growth. But inflation falling will allow the Fed to cut rates maybe more than is currently expected, because we're only pricing in 2 rate cuts in 2025 by July. You could be getting at least a rate cut every other meeting, which would be about 3, maybe 4 rate cuts by July. Maybe 6 or 8 rate cuts throughout next year. If inflation starts to fall and really undershoot, that would be good for Tesla. That would be really good for Tesla as rates go lower. Just imagine how well Tesla has done, or think about how well Tesla has done in the last couple of years. And then imagine if rates go back to more of a reasonable level. Yeah, it's a crazy thought, because Tesla would have done a lot better if rates were lower, even from a profitability standpoint, because Tesla's buying down the interest rate. So as rates do fall, as I expect they will over the coming 12 months, more than Wall Street is expecting. Keep in mind, everyone's expecting rates will come down, but I think they'll come down more than what the markets are currently pricing in. Then Tesla needs to spend less money per car that they sell to actually buy down that interest rate, to offer that 0% or 2% interest rate to make it affordable for people to get into vehicles. So I think personally, Tesla could be firing on all cylinders next year. And I think as we go through the rest of this year, Wall Street might start to figure that out and price that in ahead of time. And I don't think you've priced that in not even halfway yet. I think you're probably at about 40% pricing in of next year's possibilities. Markets price in a lot ahead of time. Sometimes they even overshoot that. So just based on kind of that principle of we're only pricing in about 40% of the actual reality of next year, there could be a lot of pricing in to do to the upside for Tesla throughout the rest of this year, and even, much more of an acceleration of that as we get the actual results, as we get the news of Tesla's, robotaxis rolling out in perhaps Q2, and maybe not in 2 states, but in 10 states or in 8 states or in 6 states, right? These are all upside surprises I expect we will get. So from that standpoint, I would not bet against Tesla being a $430 to $450 stock by the end of this year. And, I talked about this in March of this year, that my year-end price target was new all-time highs. And as logically so, nobody can, be perfect and perfectly forecast every little event that's going to happen. But I still want to stick with that. Tesla could be a $430 to $450 stock by the end of this year, pretty reasonably. And in my personal opinion, Tesla by the end of next year, if things go well, could be a $600 to $800 stock. Now, obviously, I'm not a financial advisor. I'm not a financial planner. You obviously don't want to, just take my word for it. Come to your own conclusions. But really, ever since we broke above this longer-term downtrending line, things have looked exceptionally good for Tesla. And even in the near term, when you look at the technicals we've seen ever since Tesla hit $138 per share, you've been hitting higher highs and then consolidating those gains, coming back down a bit, but remaining at those higher higher lows, I should say. You have been hitting higher highs, but really it's the higher lows you want to watch. You went up, right? Kind of went up, based out. This was a higher low, went up, come down, base out. Still, even though it was close, you hit a higher low. You went up, you based out, higher low. You went up, you came down, you based out, higher low. Went up, came down, based out, higher low. You've went up, you've based out. It looks like you've created now a higher low, and you could be ready to jump again. And then I would expect another consolidation, another basing out, and a new higher low. These things tend to repeat over and over again until they break. And if it was going to break, Tesla would have fallen under $310 per share. Then you would have broke this pattern of hitting a higher low. It has not happened. Markets, to me, look more bullish now following NVIDIA earnings. I don't know. If you're short, you should be terrified. Okay. Now, I was looking at Tesla call options as well, and I really don't like those either. So, I think the best way is to really play Tesla here is to just own the shares. Sorry, might be something that you guys don't like to hear, but I think the options are pricing in a lot, and they're very expensive. Even though I think Tesla will deliver by year end, they're pricing in a lot, and I don't like the risk to reward just versus buying the shares. Hey, just my thought. And obviously, I do not like the puts. I didn't even look at the puts today. It's not even an option. I would be open to selling some puts here, like ridiculously, probable plays. But, even if you sell like a 250 put, even if you did get assigned on that, like, is that a bad price? Clearly not. So I think there's an opportunity there. I don't like the calls. I like selling puts. That idea makes a lot of sense, but definitely not buying puts. And you definitely don't want to be short in this stock because at any point you are vulnerable to see a short squeeze. You actually did have 1.24 million shares get covered on today. So short sellers, they actually took today as an opportunity to get out of those short positions, or at least some of them. And again, another strong day for option activity, not as strong as what we are used to in the last couple of days with 90+% positive order value, but eventually that streak has to end, and it looks like it ended today. You had 179 different trades from hedge funds and institutions totaling $160 million with a positive order value of 66%. So all in all, I hope you liked the video. I liked making this video. It's pretty fun, honestly. I think every video is fun, but especially these where it just looks so clear, the path ahead. You can say things very confidently. Those are extra fun videos. So let me know what you guys think down below in the comment section. With that said, have a great rest of your day, and I will see you in the next one.